as you guys can see, there is a face cam. A lot of my friends been telling me to use a face cam. I'm gonna use it for this video. We won't get in the habit of this. We will not get in the habit of this. My friend's been telling me to do a face cam, and I asked you guys in the comments, I think in my last video, if I should use a face cam. You guys like the message, so I guess we can use a face cam. We will not get in the habit of this. I'm just trying it out, and we'll see where it goes. But for this lesson, this is going to be about AM session macros and why sometimes I do trade them and sometimes why I don't. Usually I don't, because I have models that will get me in the move prior to the macro. The first step to a macro is you do need a draw on liquidity. If you can find a draw, that's really all the heavy lifting, and I'm going to show you why sometimes I'll trade ahead of the macro. So on this day, there was news at 8:30, and you guys are going to see me talk about news all the time. So 8:30 news. So what you see here is like the time. So 8:30, 9:30 macro. I'm going to show you guys. This is like probably everything going to be summed up in just a few minutes, I guess. Let's say you have liquidity down here. And this is exactly what I'm telling you. It's not always about macros and silver bullets. If you have a smart money reversal over here like this, you can expect 9:30 to distribute right into that. Okay. This is why I leave anything past 9:30 alone. If you can see a smart money reversal over here and then 9:30 purge any type of liquidity, if you see that, the AM session is done. The only thing you can possibly get from this point on is reversal into the macro, taking you in the range, and then a choppy silver bullet. That's what you can expect, I promise. 8:30 smart money reversal, 9:30 distribution. It comes off the opening range into a macro that will provide a range and chop into the silver bullet. This is a template itself. This right here shows you 1, 2, 3, 4 different models. Not that you guys can identify, but this is 4 different models right here, and this is just one case. Your economic calendar will tell you ahead of time when this is going to happen. Here's another case. 9:30 will be the smart money reversal into the macro, distributing into liquidity. So it's basically what happened over here, but 9:30 does it. And this is when you can expect the silver bullet to take you your true trend, if that's the case. Those are 2 different models. The reason being is because one's at 8:30, one's at 9, and this provides you 1, 2, 3 different entries. Not to sell side, but 3 different models, you know, and all you need is one. And this is a template itself. And there's times when you take the silver bullet, and there's times where you avoid it, and there's times that are going to increase your probability. But the moral of the story is you need a draw. So where is the draw? This is the draw. Look at 8:30. Is there a smart money reversal? If there's not, look at 9:30. Is there a smart money reversal? If there's not a smart money reversal at 8:30 or 9:30, look in the London session. Is there a smart money reversal in the London? Wherever you think that there's a smart money reversal, look for SMT. Those are the only places you're going to look. There's no in between. Look at 8:30, look at 9:30, and then you know what times should distribute. So if 8:30 is a smart money reversal, 9:30 will distribute lower. If 9:30 is a smart money reversal, expect your macro to distribute. It's just that simple. And just around that, you can have so many models. I only need one. You only need one. And that's the moral of this conversation. Liquidity pool down here. So this would be low-hanging fruit right there. 8:30 news would be right here. So the reason why I would take the opens and not focus on the macros sometimes is because if we have a clear pool here, which is a low-hanging fruit, and then we have objective down here, which is a higher time frame for value gap. If you can get in around the open, you can ride this down using the macro for best case scenario to get to your objective, and eventually hits it here. So coming for the macro, you're going to have to be very careful with what you do, and also taking this price point from this high, from this high to that low, and projecting it down, you'll get this level here. And we'll go for a big figure. So we'll go for the 30. A few things I stacked right there. I used my price projections for this level. And every time I price project, I will look on this axis here and I will go for a big figure. So I'm not just aiming for a level like this. I'm going for a number around this level that is algorithmic. So using that price projection, you would come across this, and this is if you feel good with the profit you made off your entry, and that's going to be different for most people and what they like. So as I was saying, this macro is the 950 macro. This is the 1050 macro. The reason why I prefer the opens is because the opens take you into the macro, displacing into liquidity, if that makes sense. So we'll try to draw something here. Okay, let's pretend this was the 930, okay, and we took a high shift, and let's say this is the start to the 950 to 1010 macro. Pretend we have liquidity here. The reason why I prefer the opens is because I can get in at a breaker before the macro and deal with it retesting an order block once, retesting it twice, and then going. So some days I will use the opens. Now it could be 930, it could be 830. One of those opens I will use, and that is usually depending on the economic calendar. Whatever the economic calendar is suggesting, that's what's going to determine if I'm going to trade the opens or the macros. Now, that information I just said, you can research it, and I've been saying it on this channel for a while, but that's what determines if I'm trading a macro sometimes of the week or trading the opens. Basically, if you can get an economic calendar that would suggest to trade a macro, the thing you need after that is SMT at the opens. If you can get SMT at the opens, an economic that suggests to trade the macro, and liquidity, those three components, you need three of them. That is like the best setup you can get. It doesn't get any better than that. Literally, it doesn't get any better than that. So you will know that the Forex Factory, or whatever you get your economic calendars from, that is the roadmap to trading. So in this case here, you could do both. You could take the 830. You could take the 830 short into the macros down to this liquidity. Now, this 950 to 1010 macro, it didn't provide it to take that liquidity yet, but the 1050 to 1110 macro does. And another thing too that I said in the last video is if you have 830 news, it will activate the 1050 macro. Just back test it. You know, don't believe me, just back test it. But this 830 will activate this 950 to 1010 macro. So when you guys say, well, what do you mean? How do you know what activates what? Well, one, I have a Patreon down below. Aside from that, I tell you, if there's an 830 news driver, you might want to look at the 1050 macro. Reason being is because if volatility steps in around here, if they step in around here, you want to stay out of this type of price and trade this run where it just cuts right through like that. That's why I'm saying that. And it depends on when the economic drivers land. Like sometimes you have like 9:45 news. Sometimes you'll have 10 o'clock news. Sometimes you'll have Powell speaking in the PM session. You know, just do your homework on what these things are. His 2022 mentorship is very good. And that's all my my revamp was just an amplified version of that. His 2023 mentorship, he's literally catering to everybody. So those two are really good. But that's why sometimes I would trade the opens versus the macros. There's a time and place for it. And if you don't know when to trade a macro, when to trade the open, when to trade, if you don't know when ahead of time, you're shooting in the dark. You're always going to have hit and miss trades. That's it. So the lesson you should take away from this video is, what is your model? You know, what is your multiplier? This alone is its own multiplier. This alone is its own multiplier. If you're trading macros, trade macros. If you're going to trade the silver bullet, trade the silver bullet. If you're going to trade the opens, trade the opens. Don't dabble over here, dabble over there. Stick with a model that you know consistently yields. For me, I like the opens. There's a little bit more models that I have, but personally, if the opens don't perform, I don't bother engage with the rest of the day. So that's why sometimes I prefer the opens.